Rob Johnson in for Steve Cochran. Fitch's ratings, which does the credit rating for various municipalities, states, feds, whatever, that sort of thing, lowered the country's credit rating to AA plus from AAA. It said the ballooning U.S. debt load and the weakening of governance, which is a very interesting term, is the reason for the downgrade. And people know that when you downgrade credit ratings and things of that nature, it makes things a little bit more harder to borrow money, higher interest rates, things of that nature. Could it impact a recession? We're trying to come out of a near miss, but are we headed to one? And right now, Caleb Silver, editor-in-chief at Investopedia, joins us now. And Caleb, welcome to the Big 89. So tell everybody, kind of in a general sense, what does the Fitch downgrade mean for all of us, borrowers, consumers, taxpayers?
Yeah, it doesn't mean much at the moment, but just think about this. The United States has had a AAA credit rating for years. The last time we had a credit downgrade was 2011 after that debt ceiling stand-up. Of course, we resolved that, and we resolved the most recent one. But when you have a AAA credit rating, that means your bonds and our government bonds, which we use to pay our bills, they're the most highly rated asset in the world in terms of our ability to pay our debts back. But Fitch, which is one of the credit rating agencies, along with S&P and Moody's, says the lack of governance, the inability of our political leaders to come to agreements on things like debt ceilings is going to be a problem going forward, and ballooning government spending. And those are all true, right? So downgrading that debt means that there are investors out there that will only buy AAA rated bonds. So if nobody's buying our bonds because we lost a credit rating, that could drive bond yields higher, and bond yields are really the foundation of what credit card ratings, credit card APRs, mortgages, new car loans, those are all based off. So it could send those yields higher. Now, is it going to happen because of what Fitch did? Probably not. But if the other rating agencies follow suit and downgrade U.S. debt just like Fitch did, that could drive bond yields higher, which will drive our borrowing expenses higher.
Caleb, when Fitch is making this decision, did they base the downgrade? You said it hasn't happened in 20 years. Did they base it on just like financial mismanagement over those last 20 years? Because it seems to me, you said, well, this hasn't happened in a long time. So there's got to be a moment when they say, well, this has been going on too much. We need to downgrade.
Yeah, it really happened around the debt ceiling impasse of a couple of months ago, which, of course, was resolved. We pushed the debt ceiling out until 2025. But so a lot of people were scratching their heads saying, why now? 2 months later, we've resolved the debt ceiling. But they're looking at the big picture and saying, no, you keep spending more and more money, the U.S. government, and you can't come to agreements. It comes to the last minute. So we see more of this going forward, especially going into an election year next year. That's what they're looking at. But the fact that it came 2 months later has a lot of us scratching our heads saying, why now? Why didn't you do this a couple of months ago when this teapot was boiling over?
I know the U.S. Treasury Secretary Janet Yellen is scratching her head, Caleb, criticizing this decision, saying, quote, Fitch's decision does not change what Americans, investors, and people all around the world already know. The Treasury securities remain the world's preeminent safe and liquid asset, and the American economy is fundamentally strong. And I realize there's a little bit of a spin there. You were talking about this being related to the debt ceiling, and then we saw I mentioned the quote at the top about the weakening of governance. Is part of this, because it's coming 2 months after the debt ceiling was resolved, the fact that every time we get near a debt ceiling now, it's this huge game of chicken? I think we all know how it's going to end, but they still play this game, and both sides posture, and it's just kind of an ugly thing. Do you think politics is playing a role into this financial decision when they see what's going on, or is that not really anything to worry about?
Oh, no, that's 100% what's going on. Fitch is looking at the way that our congressional leaders deal with things like the national debt, deal with things like spending, deal with things like the debt ceiling, which is a silly law we've had on our books since 1917, saying you guys can't come to an agreement on anything, and we have bigger problems coming down the road. We have a budget debate that's coming up in a couple of months. We're going to have the fiscal year ends on September 30th, so Congress is going to have to come to agreement on a budget and stamp that budget to go into the next fiscal year. That's going to be a political battle. So they keep seeing these things coming up and more government spending. More government spending means more deals are going to have to get made. And when congressional leaders can't come to the table and make a deal on just about anything like the debt ceiling, they see this as becoming a bigger and bigger problem, especially, as I said, going into next year, which will be an election year.
So, Caleb, let's talk about us, because that's what everybody cares about, is themselves and how this is going to affect their finances. So a downgrade is not going to affect the country's creditworthiness, but will it impact our personal finances?
Only if we see another downgrade by another rating agencies, and if you see more and more of that, or if you see another level down from AA+. AA+ is a pretty strong credit rating, although we've enjoyed AAA for decades, except for 2012. So if you see more downgrades, that's going to push bond yields up, because that's going to make our government bonds less attractive, which is going to, again, spike bond yields, right? That's what happens when people don't want to buy our bonds. Yields go up, and that drives our borrowing costs higher for things like credit cards, new home loans, car loans, et cetera. But right now, it's not going to affect us, except it did spin the markets out a little bit. It could be a bunch of factors, but it's not going to affect what you do day to day.
Well, it's good news. We'll take any. I mean, even though that's bad news about the downgrade.
Well, when can we get upgraded?
Yeah, I think if we get the budget under control, get spending under control, which is not going to happen because we keep spending more and more money, I think we could get that AAA credit rating back. But again, this is like giving us a grade for a test we may have failed a couple of months ago, but now we've done the tutoring. We're a little bit better off. The economy's in better shape. That's why a lot of people are saying, why'd you do this now? This seems silly.
Well, hopefully our leaders, our congressional leaders, get the message that, you play politics with a lot of things. When you start playing politics with things like this, other people that are watching that have clout can react in the way they did. Caleb Silver, editor-in-chief of Investopedia. Thanks for joining us,
Caleb,
on the Big 89 today.
Thank you.
So.
Well, that offered a lot of insight for me.
Yeah, I mean, you don't want your rating downgraded.
No,
nobody wants that to happen. But it was good to know, at least from my perspective, when I asked him the question about, is it just this constant game of chicken and this posturing and all this stuff, and we're going to shut everything down and do all that. I mean, it's just ridiculous. And so now we're paying the price for it. At least our country is paying the price for it.
Well, and I like what he said. We failed the test. We did the tutoring. We figured it out. Obviously, the grade is coming a little bit later, but now we're on the right track. And again, it's not affecting your personal finances unless another one or more of the credit reporters downgrade you. So that was fine. I was all right with that.
I just think keep an eye on the market. And like Pat Brady said yesterday, politics kind of plays into some things when it comes to the market, too. So. Yeah.
Right.
I mean, yesterday, everything was down yesterday.
All the stocks dropped.
See what happens this morning.
As a reaction to this, of course.
Exactly.
Directly. So he was talking about doing the tutoring. The question is, did anybody learn anything? And we won't know that. So we did the tutoring. We've done everything. The message is received.
Yeah, what do we
just
learn?
Need to make sure the message is received.
Well, it'll be interesting to see what happens today in the market as well. Since that was a reaction to yesterday, does it stay down? What do we see? What happens today?
Pretty interesting stuff.
We'll know tomorrow.